Hi, this is Sai Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexpsummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpsummit.com forum and read my analysis for the week before watching this daily video. Greetings everybody. We probably guys still have few minutes to the final countdown, since it's approximately the half an hour to the final statement and final release, official release of the results of the voting. But right now, as you know, that's probably the United Kingdom still will leave the European Union. There are a lot of different questions still stand with this, so they could, for example, leave the European Union but stay in the European Union financial sphere, financial area, economy area. So, but that currently is not really the big sense, not really the point of the current discussion. What I would like to say, guys, first of all, I don't want to take a look right now on Great British Pound, because everything that we could say we had said. So we have said, and currently I do not see this really big sense to talk on the Great British Pound. Yes, it has dropped really tremendous. All that we could say is that technical analysis still has proved its reliability, because all targets have been completed. So if you will take a look at the monthly chart, guys, just half a year ago we could gamble why market could reach this destination point. I will show you our extension. You know, guys, those of you who read our analysis, weekly research, every time we said that we have the bearish view and probably market should hit at least these lows around 130 area. It hasn't quite reached it yet, but I think that's not the question, that market will reach them. So 130, it was really very difficult to suggest what the reason will be, but that was predicted even here when we have started to take a look at the economy of Great Britain, when we saw that's really problems with the rate hiking, and in general most of the situation stands bearish. Right now it's the Brexit that has added a new push down for the Great British Pound. And right now on the monthly chart we could take a look at far more extended bearish targets. We definitely will talk on the Great British Pound a bit later when the market will come down a bit. That's what about the long-term target. On the short-term target, guys, recall our grabber that we have discussed here on the weekly chart. Just a minute, I will clear it out. So that was our bullish grabber here on the weekly chart. So we said market here, we said that market should hit this top and maybe it should lead market to the 151. That has happened, guys. Not quite 151, just 50 pips. Has not been passed till the 151, the 618 major resistance, but grabber has completed the target and it has reached 151. Here with just one mistake we have done, that we thought that maybe this grabber could become really the indication that United Kingdom will stay in the European Union, since it was the bullish pattern. It will suggest upward action, and we said that probably logically we have suggested that this upward action could be as a result of the staying in the European Union, but that was not quite so, since it was some game and playing with the public opinion. So on this way up, the public opinion suggests and shows, the pulse shows that mostly people would like to stay in the European Union, but the situation has drastically changed today's morning, when almost 70% of the voting has been calculated, and it shows that United Kingdom probably will leave the United Kingdom will leave the European Union. So this market has dropped, but by itself, the grabber has completed the target, and it really has touched this take out of the stops and really has reached the zero. Finally, guys, on the 4-hour time frame chart, on the daily chart, the double repo pattern that we have talked about yesterday here was triggered We have got the close below 3 by 3 right now, right here on this drop down, and it has continued to move down. So yes, it has taken the ultimate some just unbelievable target by this voting. By itself, this pattern has worked that we have suggested. But not only here, guys. All our setups that we have suggested has worked. So on the Canadian dollar, as you can see, upward action has happened here. What else? Okay, on Canadian maybe it's not a good example because here was double repo mostly has been failed by this volatility since market has started move up when the double repo already has failed. But on the gold market, the bread and butter trade has worked. On the New Zealand dollar, with that we will talk today, as you can see, market really has started downward action as we have suggested. Market turns to retracement also. So I just would like to say that the technical analysis very often anticipate the real events that could happen on the market, because technical analysis involves the price action, and price action suggests the expectation, some inside information or something of that sort that right now stand on the market. And since most impact are coming on the markets from the really big traders, big participants, big banks, they always know something. That's why it could explain how technical analysis be anticipated and could foresee what really could happen. The problem is that not always we could treat it correctly, as with the example of the Great British Pound. That's why on the Great British Pound we called you to not really take any long-term positions, be very extra careful with the trading and rely only on clear setups. So we have found, for example, the stop grabber, we have traded it to the upside. We have expected to get double repo. We do not take the trade within the 2 sessions until we haven't got the confirmation of this double repo. So as you can see, it's just the technical analysis needs some accuracy for us, for some diligence and discipline to follow only confirmed and clear patterns, with a strict limitation of your risks by placing the stops. Only in this case we could count on some success. So as I said, right now we will not talk on the Great British Pound since it's really very, very big topic, and we definitely will prepare some weekly research on the subject later when the market will come down a bit. But today, guys, we would like to talk on New Zealand dollar. On the New Zealand dollar, since this market has only relative relation, it's just to the turmoil in Great Britain, and it shows more, let's call it quiet behavior. It's a bit more quiet behavior that led us to trade it a bit more safe than the trades right now in the turmoil in Europe. That's why we also do not talk on the euro currency, although on the euro currency we also suggest it's bearish action. Probably euro currency should also show downward action. That's why today we will take a look on the New Zealand dollar. On the New Zealand dollar, guys, we mostly expect a retracement. This weekly chart, recall completion point of our ABCD pattern. We said yes, market probably could show some upside action, but this is a result of the overall nervousness on the market. If we wouldn't get the Brexit coming, it's probably we will not get this spike up on New Zealand dollar. Anyway, despite how it has turned, we just have got another pattern here, reversal pattern that has triggered this downward action. So now we have the completion picture on the weekly chart. We have the trigger and pattern on the daily chart. Now we could search chances for taking the short position. By taking a look at the overall picture on the weekly chart, we guys probably could suggest some deep retracement down. Probably it could be even 618 support of the whole move up, because take a look, the CD leg here is much slower than AB, and in such circumstances usually retracement becomes deeper. But if even this will be just a 3-8 retracement, that will be approximately, guys, at 67. It's not really a small move, it's more than the 200 pips down. If it will be the 618, it even will be greater. It's approximately 65 or even lower. It's when the weekly reversal stands. So that's approximately what we expect to get on the New Zealand dollar. On the daily chart, this could take the shape by some patterns. First of all, right now, as you can see, after first drop, market almost has hit the confluence support 69.20 area approximately, and take a look at daily average sold. That's why today it's not a good idea for taking short on the New Zealand dollar, and we just need to wait some bounce up. Here we could get, guys, different patterns. First of all, take a look. we could get minor head and shoulders right here, because this was the butterflies we have estimated yesterday. We also will take a look at it a bit later, and it has been completed. And very often butterflies become the part of the head and shoulders. If this is really the truth, then we probably could get retracement right back up to the 71.50 area. This probably could happen, because New Zealand dollar stands not under strong impact on the Brexit. Yes, it feels the impact, but it mostly stands on its own problems, and that's why it could react a bit differently compared to European currencies. So that's why we can't exclude the retracement could be even the 71.50 area. That will be probably the correct moment for a possible taking the short. If you have taken the short here, you just guys perfect traders. If you have monitoring this butterfly and waiting for the market will hit 1618, and you have taken the target, the position at 1618 completion point, as we have said yesterday. So you have done well. Also, guys, recall what we said on the trading of the butterfly yesterday. We said you could even take position at 127 extension. I don't have it on this chart, but in this case you will have to place stop above the 1618. So take a look. If you have taken position here, placing stop somewhere slightly above the 1618, take a look. It was really shy penetration of 1618, almost pips to pips completion, and turned down. That's probably also you have the good position right now. I'm speaking right now for those who haven't got any position on the downside. So this is not really, you do not lose something, because you will have another chance for a possible taking the short. And as I said, it's probably we could get retracement right here. That's the first pattern that could be formed. Second pattern, guys, it's larger scale, and it also could become the head and shoulder. So take a look, this could become the left shoulder, head, and this could become the right shoulder. So we could trade, we could get the chance to trade this overall retracement multiple times. So for example, if we will take position here first, we could trade right to the neckline, then take the profit, for example, and market will start retracement here. We could recognize these head and shoulders and trying to take another short position right at the top of the right shoulder. As a result, we could get this A, B, C top, D downward retracement on the weekly chart. So it means that you could make the trade not just once, but maybe 2 or even 3 times here. Also, take a look why I'm speaking about the hand shoulders, because take a look, the top stands at 1618 extension of this retracement, and 1618 ratio is very typical for the hand shoulders pattern. So that's what we will be watching for on the daily New Zealand dollar. On the hourly chart, on the 4-hour time frame chart, you could see our butterfly, how it works. Perfect. Market has dropped. And here is the levels that I am speaking about as the potential retracement. So that's 3871 even, and next one is 7170. So that's probably the level that we should watch, will be this one. For taking the short position, if market will shows retracement here, you could think about the taking the short, because probably retracement down on the New Zealand dollar should continue.